from where you sit.
Many thanks for joining us for another episode of The Trading Bell. This week on the program, we'll be speaking to Sam Omukoko, the Group Managing Director for Metropol CRB. Let's take a look at his profile. Sam holds a Master's of Science degree in Finance from the University of Nairobi, as well as a Bachelor of Science degree in Math and Statistics. Sam has been involved in many interventions in the financial services and capital markets, credit training, development of credit curricula, and credit reporting in a wide range of sectors, including the tourism sector in East Africa. Well, time to dive into that conversation. Many thanks, Sam, for joining us on the Trading Bell.
Thank you.
Let's just start off by, what does Metropol do?
Metropol is a business information company. In that space, we are licensed by the Central Bank as a credit reference bureau. We were licensed in 2011. We're also licensed by the Capital Markets Authority as a rating agency. We got our license in 2014. So we focus mainly on providing information that empowers decision makers to make business decisions that facilitate business expansion, business growth, and customer management. Mm-hmm. Yes.
And your agency, your organization does a very pivotal role in the country. And as we get deeper into this conversation, let me just also understand, how is the investment space right now in the country, bearing in mind what's been happening in the capital markets?
If you bear with me, you've seen that there's been quite a lapse before the capital markets did an IPO. We as a rating agency normally focus on providing ratings to companies that are looking to issue bonds. For the last 2 years, that has not happened. So there's sort of like has been a lull. And if there's no appetite for companies to raise capital through bond issues, then the pool to ask for ratings, yes, the demand for ratings usually goes down. Mm-hmm. So we've been concentrating on the rating space for insurance companies. We've rated about more than 35 insurance companies. And insurance companies' ratings is usually about the claims paying ability, because many of the brokers who place business with them want to be sure that the companies have the financial capability to meet their claims on time. Mm-hmm. We have also extended these ratings now to a few corporates, in the sense that we're looking at structured financing. Mm-hmm. We've been discussing with a few corporates on infrastructure, mm-hmm, funding. These conversations are taking place with the World Bank, with the Revenue Allocation Authority, to be able to bring counties into the capital markets to start looking for funding, because much of what the counties want to do cannot actually be funded by the allocation they get from the national government. Yes. So they've got to become innovative and start looking for alternative ways of raising funds to invest in their projects. Uh-huh. Yeah.
And you've raised very important issues, Sam. And let's talk also about how the NSE can be a key partner for what you do, and what do you see in the horizon?
The way the economy is now placed, having a demutualized NSE, which is now competitive, what we're looking at is an NSE that is able to come up with diverse products that attract investors to come and issue paper or look for whatever funding that they can be able to get. There's a thing that has happened in this country, is that the banking sector has for a long time dominated the funding of economic activity, whether you're looking at short term or you're looking at the long term. And that has given us a challenge in terms of how our yield curve looks like.
Yes.
So we need to have a situation whereby we have long-term products in the market that can help us correct our yield curve, and then we can be able to attract institutions that are looking at investing in the long term, so that then provides a way in which you can be able to project what your cost of funding is going to be. In the current situation that we see, the NSE, I think that is now likely to happen, and is going to bring a lot of certainty about how one can be able to predict the future cost of credit going forward.
And Sam, let's also talk about now the role of credit reference bureaus in trying to improve how various consumers can engage in the marketplace. Of course, many of the Kenyans fear organizations like yours because it has a big implication on whether they can access credit in case they default or something happens and they are not able to pay.
That's a very good question. The credit reference mechanism, when it was introduced in 2010, it first mandated banks to share negative information only. So at that time, you were on the credit reference bureau because you are a defaulter.
Yeah.
And the pressure had come from the fact that we had serial defaulters in the market who are moving from bank to bank, creating a trail of bad debt and not bothering to pay. If you looked at the profile of the customers who had borrowed from the collapsed banks, you would basically find some common names across the board. So sort of when the regulations were enacted, they addressed that problem. But when that was done, the Credit Reference Bureau is not a blacklist. We had to go back and get the regulation amended that the banks should basically share full file information. Because then when you have full file information coming to the bureau, what the bureaus do is that they combine that data and come up with a credit score. And a credit score then becomes a metric for measuring customers' credit worthiness, so that it then becomes the basis upon which a lender should base their credit decision. And therefore, they can determine how much credit to give you and how to price that particular credit. So part of the challenge that we've been having is that how do we get people to understand that a credit bureau actually stores very useful information for you, which if you had and you approached a lender, it can empower you to negotiate terms with the lender.
Yes.
And that's really the most important point. The other thing is that all lenders now, under the CRB regulations 2013, are allowed to share both negative and positive information, which means that customers are now building credit profiles on the bureau. And that credit profile contains the credit history that then shows how you have been consuming credit and how you have been paying. And that becomes an important consideration when you now want to access credit. And if credit expands in this market,
yes,
it means that people can buy more. And if people are buying more, it means companies can produce. And therefore, it becomes a stimulant of additional investment that companies need to make to meet the demand of their customers. So you sort of like have a chain reaction that by having good credit profiles with people, it increases the demand for products and services which are provided by companies. So you have a whole economy now accelerating towards more production and more investments because of the push that is coming from consumers.
All right.
Yeah.
And talk to us about how this has been a key issue, because the perception out there is once you are in the CRB list, your chances and, of course, your outlook as an individual is sort of damaged if you get to be listed as a defaulter. Talk to us about what's the procedure of getting out of the list, and as we speak right now, looking at the Kenyan space, how are the borrowers performing? Are we having a big situation as we speak when it comes to the default rates and non-performing loans? What is the situation right now?
It's not about somebody, today you can't talk about somebody getting out of the Credit Reference Bureau. The way the laws are is that once you access credit, you then basically have a profile on the bureau. And it's a good thing to have a profile on the bureau because that's how you build your credit history. The unfortunate thing that has happened is that whereas the credit reference bureaus have generated credit scores for customers or for borrowers, lenders have not adopted the use of credit scores as a mechanism of assessing customers' creditworthiness. Once that is adopted, that when you go to a bank or you go to a microfinance or you go to a SACCO, the single most important thing is your credit score, then everybody would realize that I must have my profile on the credit bureau and my profile must contain good information, which then will give me a good credit score. So what we keep telling borrowers is that if you find yourself in an unfortunate position where you have defaulted and therefore your credit score has drastically dropped, this is what you have to do. One is that you need to address that issue. You can go back to the lender and try to negotiate terms that can enable you to start repaying the facility. You could have the facility restructured. You could get some refinancing so that the facility continues to become active. The other thing that we tell borrowers is that paying your bills on time is an important thing. For example, if you have a higher education loans board, you're a student, you got support from Higher Education Loans Board and you've come out, pay that loan on time. If you have your electricity bill, pay it on time. When you pay these bills on time, they contribute to you developing a better credit score.
All right.
That way then you are able to access credit from more lenders than somebody who doesn't have a credit score. Mm-hmm. Yeah.
And I'd like to get your parting shot, Sam, on the future of credit reference bureaus in the financial space in Kenya, and how is Metropol aligning itself to be a key player in the financial sector?
For us, we have taken a significant role in ensuring that the mechanism expands. Other than getting information from the banks, the microfinance banks, we have gone out to get information from the SACCOs. We've gone out to get information from trade credit suppliers, basically to try and build credit profiles for borrowers. The important message for us is that if you are in this economy and you're a consumer or you're running a small business, the most important thing is to have a positive credit profile on the bureau. With that profile, then you are armed to approach any lender to give you facilities that you can either use for consumption or to get money for investment in your business.
All right.
So as a bureau, we're looking at ensuring that we recruit as many credit providers on the bureau as we can.
All right.
Yes.
Many thanks, sir.
Thank you very much.
Very enlightening discussion.
Thanks.
And well, that is Sam Omukoko, the Group Managing Director at Metropol CRB, just demystifying for us the role that credit reference bureaus play in the country, and he's quite optimistic that the future is looking bright when it comes to their role in society and trying to play an active role in the financial space. Well, indeed, an interesting conversation there. Let's take a look at the market analysis for this week.
What's the story behind Deacons East Africa? For Deacons East Africa is mainly the decision to exit